Good morning, everybody. Welcome to today's episode of Canadian Mortgage Weekly. We have an awesome one for you today. My name is Sam Thompson, and I'm joined this morning by Joe Bladek. How are you doing this morning, Joe?
Oh, I'm doing really well, Sam. Thanks for the great introduction. It's great to be back here on Canadian Mortgage Weekly. We have a great episode planned for you all today. And how are you
Mhm.
doing today, Sam?
I'm doing pretty good. We're getting into October, and today's episode it's following some of the news with the election. If you watched last week's episode where we covered the Liberal platform, there's some changes that are happening that I'm excited to chat about because it looks like it could have a good impact.
Yeah, definitely. There's a lot of changes. We went through that last week's episode where we went over the main 6 items that the Liberal Party is doing for the housing policy, which was pretty thorough. And definitely take a look at that episode if you're interested in that. But there's some new changes that are coming down as well. Some really, I think, positive changes that we're going to talk about today. And Sam, we have a good episode planned because I think we're going to go through and we're going to highlight some of these changes and just go through and give our commentary about how we think they're going to impact the market and all that.
Yeah, it's going to be a good one as we cover off the 10 highlights from the CMHC increase. So this is awesome because I know it's poised to set some good changes for the market and maybe some growth in areas that have maybe felt a bit slow lately or a very seller dominated market. So
Yeah, definitely some growth. What you're saying is right, Sam, because they even mentioned in one source we saw that offers when they're coming in, a lot of offers will cap out at 999,999, which is that kind of limit where above that a buyer would need to put less than 20% or more down payment, which all of a sudden
mhm.
is quite a limit compared to a mortgage that has less than 20% down. Whereas the other offers are coming in over a million, 1.1, 1.2, and those offers that cap out at 999,000. I mean, this is going to be great news for them.
Yeah, especially in the markets where that is the going rate and
Yeah.
the house pricing. See some more buyers be able to enter into the actual bidding process and not get cut short because of that cap.
Yeah, exactly. Yeah, because the cap itself, it's at $1 million right now, where any home, just so you can all kind of get an idea of this, is that any home priced $1 million or higher requires a 20% down payment. So this whole idea of CMHC now coming down and increasing the cap from 1 million to 1.25 million will really give those buyers a competitive edge. The ones that have that lower down payment but can still qualify for that extra mortgage money.
Yeah, and exactly as you were saying, it's going to help reduce the down payment that's required, which is we're saying, it's going to definitely help, add some incentive and some ability to get into the market where previously be locked out if, you didn't have the full 20% down, you could had to reduce your purchase price, but by it being a high ratio, it definitely does, yeah, reduce that requirement for the higher down payment.
Yeah, exactly what you're saying. Yeah. And also with it being a high ratio mortgage, Sam, not only that those buyers that want to put less down payment now for a home priced up to $1.25 million, now that those homes are available or will be available, but those insured mortgages, they also will come with a lower interest rate because quite
Mhm.
often the bank takes on less risk with an insured mortgage. So they're able to pass along some of that lower risk savings to the borrower by way of lower mortgage rates.
Absolutely. And I think that's something that some people don't necessarily realize that there would be a rate difference if it was high ratio versus, an uninsured mortgage. But yeah, it's a really good point, especially, the size of the mortgage amount that you're going to get on a purchase of over a million, the lower rate that you can get, it's going to be a real boost and a lot of help, and even just incentive for more people to buy those properties.
That's right. Exactly. a lot more incentive. With that being said, that incentive is actually going to attract quite a bit more buyers now to that pool of homes that are priced in around that $1 million range. So those homes that were priced between the $1 and $1.25 million range now will have a buyer pool that is competing in that range, but also the added buyer pool from the ones that have less than 20% down that can now afford that home. So it's going to create more competition for those homes with having additional buyers available to be able to come in and buy these homes now. So yeah, it'll be interesting to see, Sam, on how this all turns out, because it'll be cool to see the additional buyers coming in the market.
Yeah, exactly. And with that, the mirror effect of that as well is that if people are able to buy at a higher price point, we were chatting before the video that it does also open a pocket of sellers where, they are also now in the market to sell a property that's maybe at a lower value, where, now they have incentive to move. That does open some pockets of availability, even in the lower price market, if it is below $1 million. So it does open up some pockets in that way as well.
Yeah, and those sellers there that are opened up to that market, Sam, they're going to take that extra capital, maybe move to higher priced homes as well, maybe outside of the city, into different areas of the market. So it's going to create more change demand, almost like where one home sells and then another home sells. So it create a nice ripple effect down the road. So with those seller pools and additional buyer pools, it's something that is said that it's going to have a very immediate impact onto the market, but we just don't know when it's going to happen. I mean, there's not exactly a sense as to when this rule change will be implemented. It's been announced, but it has not really been clarified as to when the changes will happen, or when we'll be able to take advantage of being able to actually offer our clients a lower down payment on these homes yet.
Yeah, and that's an important thing to note, is that with all this information, because there isn't a proposed release or a start that the program is actually going to commence at, it's good to stay educated and informed. And that's definitely going to be something that, we'll have our eyes and ears open for, that, once we hear that the change is existing, or, if we have a date, that's definitely something that we will, pass along to make sure that everybody is, informed on this new policy. Because again, as we were saying, a lot of the articles were saying this is meant to have an immediate impact, which, if anybody's been looking to buy a home in the last 6 months to 18 months almost, it's going to be something that everybody's looking for, to have some sort of positive change and open up some availability.
Definitely open up some availability, yes. And it reminds me of one last point here. I don't know if we've mentioned it yet, but it's also going to be able to give our borrowers, our clients, the ability to borrow more money now for those homes that are priced from the $1 to $1.25 million range. So we'll allow them to accumulate maybe some debt. Maybe that may be a negative thing, but also at the same time be able to afford that home may be a positive thing. We'll have to see. And you're right, Sam. It's going to be interesting to see when this policy takes into effect, because there's not really an understanding of when this will happen. Yeah. Well, with that I think concludes our list of 10 highlights from the CMHC changes that have been proposed, though increasing the limit from $1 to $1.25 million on the purchase price. If any of you have a question, any of you viewers, pop it in the comments below. Also, feel free to send us a private message or give our office a call, send us an email. We'd love to talk with you specifically, run some numbers for your scenario. If you're in that range, Sam and I would love to do that with you. But yeah, thanks for watching episode 42. We'd like to just take a moment. This is thanks for watching Canadian Mortgage Weekly. This is Canada's only video mortgage podcast, news podcast available. So make sure you subscribe to our channel and keep an eye out for future updates, where we'll have episode 44 next week.
Yeah, it's awesome to know that we're the number one source. And yeah, for anybody who doesn't know Joe yet, Joe, you've been in the mortgage industry for over 10 years, super knowledgeable on the mortgage process. And again, you live in Aurelia with your wife and two kids. So again, thanks so much for being on today's episode. It was awesome to be, a part of this announcement for all the new buyers.
Yeah, absolutely. And back at you, Sam. You've been also on this news podcast since the beginning. Also with Mega Mortgage now for about a year and a half, year and 3/4 now, and just moved here from Ottawa as well, living in Barrie, serving Ontario with mortgages as well. Thanks for being on the episode today. It's always good having you on and your advice and your expertise as well. All right. Well, thanks for watching, everybody. If you guys have any questions for Sam or myself, make sure you get in touch with us. And in the meantime, have a great day.